Omar Khan, NQ Mobile is up over 120% year to date. What's driving the stock?
I think what's driving the stock is investor confidence in the company. We went public last May. We've delivered 3 solid quarters of meeting and exceeding the promises that we've made to our investors. Also, recognition of the industry. It's really early in the growth stages. Smartphones are growing. We're tied to smartphone growth. And secondly, the fact that we're underpenetrated within smartphones. So we can increase our market share within smartphones from the high single digits up to high double digits as we grow.
And as you grow, who do you think you're going to be taking share from?
Well, I think the industry itself is still at a very early stage, like I said. So we're going to be taking share as we grow. There's traditional competitors in there from the PC security market, but really the growth is coming from the industry itself growing.
You're adding a lot of customers. Tell me how you're doing it.
So we're doing it by really 4 methods. One is distribution through digital marketplaces, through viral or recommendation engines, through preloads, such as preloads with OEMs or carriers, and then also retail and distribution through carrier networks as well.
All right, let's talk about some of those networks and some of your partners. You have a lot of partners. Are you agnostic? Because you're adding a lot of impressive names.
Well, I mean, I come from a background of working with OEMs and carriers throughout my career. I think it's important to make sure that where a consumer buys their phone, whether it's through a carrier, through a retailer, or through an OEM partner, we want our software to be there. So we're driving relationships with OEMs such as Motorola, Huawei, ZTE, and all the traditional OEMs. We're also driving carrier relationships such as we just announced one with Cricket, and retail distribution relationships such as one we just announced with the Cellular Connection, which is Verizon's largest dealer.
Well, NQ Mobile is big in China, and that may have hurt the stock last summer because there was a lot of worry about Chinese accounting, but you certainly come back since then. How do you grow in the US and in Europe? Because you have a nice setup in China. What about the rest of the world?
Well, I mean, in China, as you mentioned, we've got 60% market share, and we're still growing there because the Chinese market is growing. The way we grow in Western Europe, in North America, and markets like Latin America, where there's more carrier dominance, and retail plays a much more important role, we're establishing carrier relationships. So, for instance, the one we announced with Cricket is a great proof point of what we've done. We announced a billing relationship with Telefonica in Europe. So those are just the beginning of those carrier relationships that's required to be successful in those markets. The other one is channel expansion into markets like enterprise. We announced a deal with 3LM, which is a wholly owned subsidiary of Motorola. That allows us to enter the enterprise channel. So those channel expansion opportunities are really to help us expand into those markets.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to